In this video, traders, I want to share with you what my market nemesis is. Stay tuned. Hey guys, warm welcome to you. I've got all the colors out today. I want to share with you what my market nemesis is. So what I mean by that is what I'm just not very good at trading and I'm just trying to improve. And really this whole video is about kind of owning your weaknesses in trading. That's really the crux of this video. But ultimately I'm going to kind of share with you some of the things I've done to try to combat this and get better at this. So the reason I'm sharing with this now is because, number one, I think that this is the type of thing that all traders should be focusing on. Hey, where am I just not that good? Where can I do better? And then we'll talk about ways to combat that, whether that's trying to just avoid those or just trying to become better. And also to the real world, guys. You know, I'd love to be able to stand here and say that I'm great in all market conditions. I'd love to be able to say I can trade anything all the time in the cash and treat the market like a cash machine. But I know that I can improve. I know where I need to put more work in. I know what I'm good at. I know what my weaknesses are. And so, you know, part of the channel is to share stuff that I've struggled with, some of the stuff that I do well, some of the stuff that I know other people struggle with, some of the stuff that I know is a common theme of traders who I see doing well, and that's the name of the game. So this is really a nemesis for me. And also I urge you to kind of think of what's yours. What's your nemesis in the market? So it's a daily pattern. And basically, if I'm looking at trading an index, say US index, it is a US index, but assume that. I'll be looking at the daily chart and I'll be coming in and I'll be running through my pre-market checklist. Go through that every day and I go, okay, let me just assess the situation. One of the main things I'm looking at is the daily chart. And I'll look at the chart, and obviously at the moment we had big flush to the downside, kind of pop back up. And, you know, I like to look at the chart and I think in terms of rotations. You know, that's just the type of trader I am, and it serves me well most of the time. This is why I don't want to make too many adjustments to it, but I need to be aware of the weaknesses. So what I mean by rotations is, you know, 2 or 3 day up move, I'll be looking for a down move. 2 day strong up move, then maybe day 3, one more pop, sell into that. Same with the down move. The down move is slightly different when we're going long off the lows. Maybe it's extended through a level, maybe get one more flush and a pop. So I like to kind of try to time how far I think the market will go before it will turn how I want to position. Now, if we're in a rally situation, it's great if I'm long and I'm kind of driving that long, that's fantastic. But if I'm not, let's say I've had a long off the low and I've come out maybe day 1 and I've banked my profits and I've gone, okay, now what? I'll tend to wait until I think the daily chart's extended because I'm like, oh, I don't really want to short after day 1. I don't want to get long again on day 2. Let me give it a couple of days. And I might just step back, or I might have a few intraday plays, but I might just step back for the broader play and see what happens. But something that catches me out more often than not is when we get a continued bid on the daily chart. Funnily enough, it's never the other way around. If it's short, I'm always quite good at spotting that. Maybe it's because I was kind of, my skills were honed in the bear market. So that's when I kind of started trading that very brutal bear market, just coming off 2000 highs. So maybe that's just a kind of sentiment that I can feel better. But I'm just not very good when we get continued bid without much of a pullback. Those real face-ripping short squeeze rallies. You know, I come into it on day 2 or 3 and I go, okay, looks like it's stagnating a bit now. I'll try and get short on a pop. And most of the time what happens is I get quite a good entry, the market rolls over, but very often it pops back up and I've either taken a break-even stop, or if I haven't had a chance to put my stop to break even, I've taken a stop. And very often this is kind of the case. And then I'm a bit wrong-footed because I go, oh, okay, my thesis isn't right here, but I still want to look for a short. I still look for a short, but not yet. Let me give it another day or so. And so I'll sit and I'll wait, and maybe it does another day, and I'll think, okay, well, next day I'll take a short because we've had a good drive and a pause, and now, you know, and then I'll maybe get a good entry again. Actually, my intraday entries are quite good. It probably saved me, you know, money actually, the degree in that price action intraday, but I just never get that roll and turn over because I've misinterpreted the daily chart. Now, of course, in hindsight, you're going to go, well, look at the trend. The trend's so strong. It's a bull flag and all this kind of stuff. And yeah, but in the moment when you've had that 2 or 3 day run and in a weak market, and I'll kind of show you this stuff in a minute chart, maybe it makes more sense, then my feeling is that we are still in a downtrend off the high and we still may do a couple of days down move. And so it's not quite the same as, I wouldn't be doing this if we were at fresh highs. If we're right at fresh highs, breaking through highs, I wouldn't be looking to get on a short. I'd be like, okay, wait for the short to be done and then look to get long again. So it's slightly subtle and different. I remember this back in the bounce off the COVID lows. We had that relentless bid, and something I didn't do very well was get aggressive enough long quickly enough. I did okay, but looking back, I should have done better. And this has repeated itself a little bit with the recent move. I have a great read from the lows, a great read on the downside, but where I'm just weak is that continued stretch bid, which probably, looking at it, is going to just push us into the end of the quarter, and then maybe we fall lower. But it's just multiple days longer than I expect. Wrong foots me, doesn't do too much damage, but it wrong foots me enough to go, well, I don't know what to do now. I'm not going to kind of get involved because I definitely don't want to get long because I need to have a deeper pullback. I don't want to get short because that's proving to be wrong, and I'm not stupid enough to just keep selling into a strong rally. So what do I need to do? And the answer is normally just back off for a week. Just let it resolve one way or another. It's either going to get a bid and it's going to get exhausted and come back and find some support. Maybe you can get some level to get support and get along from. Or it's just going to be a relentless rally and takes out highs, and maybe there's an opportunity to kind of jump on board a pullback buy or something like that. So this is sort of what I'm talking about is when we have this type of scenario. Hopefully you guys can see that. Down move, drive back up, and then we kind of get this relentless drive. It's almost a V-shaped bottom, but not quite. And it's this here. It's this specific pattern that just seems to wrong foot me on the daily. Because what I tend to be doing is I tend to be saying, right, 2 days, let me see, 2 or 3 days, I'm going to start looking for a short. I'm going to start looking for a little pop just to sell in. I will sell just the futures are opening 11 o'clock my time, UK time in the evening. Just as they're opening after a heavy, so I've got 3 big strong days, I might then sell just as they reopen, looking for a kind of little bit of retracement overnight, and by the time I come in for European Open, there's often a little pullback, there's often a bit of a retracement there that's profitable. But what tends to happen is you might get that, but then it kind of pushes back up and doesn't give you what you really need. So this is the type of thing, it's this push, and listen, if you looked at it in isolation, you'd be like, yeah, but it's a classic bull flag. You'd be like, yeah, it's a bull flag, surely you should be buying these little wicks here. And yeah, that's absolutely right. But at what point do you go, hey, this is a bull flag versus this is actually a pullback, and that point there is probably like here, which is actually a reasonably fair pullback. It's like a pullback into the middle of that, into that downdraft. You're expecting maybe some sellers to hit it, but it's not happening. When I see this, I think, well, this is probably likely to put in a nice red candle. I'll get a good downdraft, and that won't overstay my welcome. I'll take the short out, and then the next day I'll maybe look for a little bit of follow through to perhaps get long on a wick, and then maybe we continue, or maybe we had that kind of neutralized sort of range bound environment. And so, what am I doing to get better at this? I'm basically saying to myself, okay, if we are in a rally situation, be very careful. This market is just the way it is, right? So the way it is at the moment, these rallies are relentless and then they turn quickly. And so I'm saying to myself, right, if by all means have a go at these, by all means have one bite of the cherry and try and get that, but be mindful and see when those lows come in intraday on your 15-minute chart and they get bid, take that as a warning sign, because most of the time, if you're getting that snap off the lows, as soon as that selling comes in, it's going to cascade heavily because everyone's going to be waiting. Because the whole point of that trade is that everyone's waiting to get short, everyone's waiting to cover their profits from the lows, everyone's nervous, everyone's a little bit antsy, a little bit ready to hit those bids. And so in theory, and history shows that, when you catch that little sweet spot and you get the flush right, it's going to have a really big down move, and that's what I'm kind of looking for. And so I think one of the things for me is to be a bit more observant of how it reacts over that first 2, 3, 4, 5, 6 hours. If it does make a down move, 100, 200 points, looking at the Dow for example, but then pops back up and doesn't sort of flag and hold at lows and hold below the VWAP, and maybe it's not quite right, maybe it's got one more day in it, or maybe it just needs to digest a bit, maybe it's a doji type of day, which I don't want to be short on anyway. And so, these little clues, I think the point of this video, guys, is that, we've all got things that maybe just catch us out a little bit. And one of the answers is to just kind of step back and give things a break. Absolutely fine. And I think that's a perfectly good thing to do. But maybe it's a hybrid of saying, okay, well, have one go at the idea, but just watch out for this, and this, because this seems to be a common theme that shows you that you're wrong with that idea. And so when you dig into the charts and you dig into, rather than just going, oh man, I had loads of unrealized profit and it came back and stopped me out and just getting frustrated and going to the next, just look at it and go, okay, is there anything from this? I know sample size of 1 isn't great, but is there anything here that you've perhaps seen before and makes sense logically from the supply, demand imbalance and price action that would say, hey, do you know what? That's probably a bit of a tell that. If you do get that first little move and finally got a 200-point profit unrealized, if it starts to catch a bid at the European Open, if it starts to hold near highs above VWAP before the Open even, it's not quite the trade you wanted, versus the ones that are beautiful, the ones kind of selling into these pops down on this down move, completely different. You'd have that kind of 1 day pop, half a day, you'd get short and then you'd wake up and it'd be down 400 points. Now I know it's extreme range then, but any bounce would really struggle. It wouldn't be able to catch a bid. It would struggle to get above the VWAP. If it did, it would be sold instant. It's almost a flip reverse of the kind of when you're in the bid. And so these little subtle clues I think are super, super important. Anyway guys, gone into probably too much detail about this type of thing, but hopefully it's helped. This is what it's all about. We're all about improving, taking our trading to the next level. This is something I can definitely do better at, and I'm going to continue to improve this type of trade. Fortunately, it doesn't happen very often. Well, to be fair, it's happened quite frequently last couple of years we've had it, but it's not something that happens every day and I'm thinking, oh, it's cashing me out regularly, but it's there, something I can improve on. What's yours? This is the question for you. What is yours? What's your nemesis? What's your one thing or a couple of things that you look at it and go, that often catches me out and I need to do better at? Because if you can identify that and identify how you can become better, then you become a better trader. All right guys, take care. See you next one. Bye-bye.